Okay, so I want to circle back around and kind of talk a little bit more about some sort of generic business strategies and sort of talk about what businesses do to make money. So now remember, profitability means the excess of revenues over expenses. And so there's two ways that a business can earn a profit, two generic strategies that a business can use, I suppose I should say. And one of them is by being a low cost provider. And so that way they can keep their prices low because their costs are low. And I'm sure you can think of plenty of businesses that employ that strategy. Walmart, is able to charge very low prices by really squeezing their suppliers and keeping their costs very low. And there's many other examples of that. I'm sure you can think of some yourself. The other way that a company can make money is by not really worrying too much about costs, but by making a large profit on each unit by charging a high price. And so, therefore, they don't need to sell a whole lot to make a lot. And premium pricing is, again, I'm sure you know many businesses that follow that model. And quite honestly, the ones that I'm aware of are probably not the same as the ones that you are aware of. But let's say Nike, charging $200 for a pair of sneakers. That would be a premium pricing strategy. They don't need to sell a whole lot of those to make a significant profit, right? So those are two generic strategies that can be used to maximize the difference between revenues and expenses. So now these are some sort of concepts that you probably would have seen in Management 101. But I want to review them because we are going to be sort of spending time in this class looking at the financial reports being generated by these different types of companies. And so just to kind of review, service companies are those companies that perform services for a fee. So their revenues would come from things like providing accounting services, providing consulting services, providing skiing services, right? A ski resort, in a sense, is a service company. A car rental agency is a service company. They're providing the service of allowing people to use their vehicles. And of course, all those gig economy type companies, Uber and DoorDash, those provide services as well. So those are companies where the revenue comes from providing services for a fee. Merchandising companies are those companies that purchase goods that are already ready for sale and then sell them to customers. And later in the semester, in the summer, we will be making a business plan for a merchandising company where the cost of what you're selling is just the cost that you expend to purchase whatever it is that you're going to sell. So retail operations are the kind of merchandising companies that you would come into contact with most frequently in your world. Manufacturing companies, they actually are companies that build things. They buy raw materials and then they expend costs of converting these raw materials into products, and then they sell the products to other companies or to consumers. So here are some examples of companies set out by their industry that follow both the low-cost strategy or the premium price strategy. So in the airline industry, low-cost provider would be Southwest, and a higher price would be Virgin Atlantic. A low-cost freight company would be Union Pacific Railroad, which you guys probably aren't even aware of. And FedEx would be a more high price, right? Trucks that go around and get things from point A to point B very fast, etc. Sam's Club being a low-cost retail business, and Talbot's being more of a premium price retail business, etc. Right? So here's what we mean by the difference between a low-cost and a premium price business across a number of different industries. Now, the other thing I want to kind of talk about who is involved in the business. And I'm not talking about stockholders or people who actually invest money in the business. I'm talking about who cares. Who are the people, right? In our triple bottom line, we were looking at people, planet, and profit. The people are stakeholders, right? All the different stakeholders that are affected by the company or who affect the company. And so, for instance, right, a general category of stakeholder would be those in the capital markets, right? These are stakeholders who provide major financing for the business. They certainly have a vested interest in how the business is doing. They are stakeholders. And they would include entities such as banks, or the owners of the business, or the stockholders in a corporation. Now, other stakeholders would be, the customers or the sort of the product or service market stakeholders, people who do business with the business. So the buyers of the products and the vendors to the business are also stakeholders. These are some of the people that are affected by how a business does its business, right? Customers and suppliers. Now, the government obviously has an interest in business because governments are run by the taxes that are generated from businesses. And so, all levels of government have a stake in how well businesses are doing. And finally, internally, right, people that are internal to the business, the employees and the managers of a company also have an interest in how the business does business. So this is sort of the people side of the triple bottom line. And businesses have to not only be concerned about profit, but also concerned about people and the planet. Now, lastly, I just want to quickly run through the different legal forms that a business can take. Again, this should be review from a Management 101 type of a class. But when you're setting up a business, you need to make a decision about what kind of legal form you want to take. Are you going to remain a sole proprietorship? Is it a small enough business that one person or a family can run it? Sole proprietorships are very, very common. They're probably the most common form of business formation. And it is possible, right? One of the ways that you can set up a proprietorship is by creating a single owner LLC, which reduces the liability that owner has to the business. Most small businesses are set up as LLCs, even if they're a sole proprietorship. So partnerships, if you've got more than two or more than one person with ownership stake with sort of roughly equal or comparable ownership stakes in the business, you can set it up as a partnership. You'll see a lot of doctor's offices, lawyer partnerships. You hear about people making partner in a law firm, right? That's what that means. So they own the business jointly. And then there are corporations, and corporations are legal entities that exist separately from the people that are running them. And so most of the big businesses that you see, and many small businesses actually, are set up as corporations, where the owners are called stockholders, where your initial investment in a business involves actually selling yourself shares of stock. And so, as I said, this sort of shields the owners of the business from certain elements of liability for the debts of the business. But it's a much more complicated structure to set up initially. And then more recently, there has become a way to set up corporations such that they are explicitly designed not only to maximize the wealth of the stockholders, which is truly what the goal of corporations is supposed to be. Benefit corporations are designed so that the profits can be set up explicitly to maximize social benefits as defined in the original charter of the corporation. So there are a number of companies that you may do business with already that are actually set up as benefit corporations that are designed to have in their corporate charter elements of the sustainability triple bottom line that we discussed in an earlier slide. And so you might be surprised to find some of these businesses around here or that you do business with are actually set up as benefit corporations. Mascoma Bank, for instance. Stonyfield Yogurt, which is a New Hampshire company that maybe you listened to in your How I Built This story. Patagonia is a benefit corporation. And Badger Balm, another local company. These are all examples of benefit corporations. And again, I strongly recommend that you click through those links in the PowerPoint and take a look at their websites and see all the good that they are doing in the world. So every time you buy some yogurt from Stonyfield, you participate in their social enterprise. That is the end of this mini lecture, and we will move on shortly.